So, you've heard whispers of crypto riches and stories of overnight millionaires. Maybe your neighbor even brags about their Dogecoin profits. Welcome to the exciting world of cryptocurrency. It's a wild ride, kind of like a roller coaster designed by Elon Musk. In this video, we're going to cover the basics of cryptocurrency trading, giving you the knowledge and tools to navigate the exciting, sometimes unpredictable world of digital assets. By the end, you'll have the confidence to jump into crypto and make informed trading decisions. Before you dive headfirst into buying every coin with a funny name, let's talk about market capitalization. It's a fancy way of saying how much a cryptocurrency is worth. Think of it like this: the bigger the market cap, the bigger the ship. Large cap cryptos are like giant tankers, stable but slow to change course. Bitcoin and Ethereum are the captains of this fleet. Then there are mid-cap cryptos like cruise ships, a little more nimble, with potential for growth. Finally, we have small-cap cryptos, the speedboats of the crypto world. Risky, but they can really fly. Knowing the market cap helps you understand the risk involved. It's like choosing between a leisurely cruise and whitewater rafting. Both can be fun, but the experience is vastly different. Remember the Dogecoin hype? That, my friends, is the power of meme coins. These cryptocurrencies are often based on jokes, internet trends, or even dog breeds. They're like the unpredictable cousins of the crypto family. Meme coins can have massive price surges, fueled by social media frenzy and celebrity endorsements. But be warned, these rides are often short-lived. The same hype that sends them to the moon can also cause them to crash back to Earth. Investing in meme coins is like playing the lottery. You might get lucky, but it's more likely you'll end up holding a bag of virtual beans. Stepping into the crypto market without a strategy is like exploring a jungle with a map drawn by a toddler. The crypto world is vast and unpredictable, filled with opportunities and dangers alike. You might stumble upon something interesting, but you're more likely to get lost and eaten by a python. Without a clear plan, the volatility can overwhelm you, leading to hasty decisions and potential losses. Having a trading strategy is crucial. It acts as your guide, helping you navigate through the ups and downs of the market. A well-thought-out strategy can be the difference between success and failure. Decide whether you're in for the long haul or for quick trades. Each approach has its own set of rules and requires different mindsets. Long-term investors focus on the bigger picture, while day traders capitalize on short-term market movements. Set clear entry and exit points for your trades. Knowing when to enter and exit a trade can help you maximize profits and minimize losses. It's all about timing and discipline. Remember, don't invest more than you can afford to lose. The crypto market is highly volatile, and it's essential to protect your financial well-being. Only use funds that you can afford to part with. This isn't Vegas, even though it feels like it sometimes. The thrill of potential gains can be intoxicating, but it's crucial to stay grounded and make informed decisions. Risk management is your safety net in the crypto circus. Just like a tightrope walker needs a safety net, you need strategies to manage and mitigate risks. This includes setting stop-loss orders and diversifying your investments. Use stop-loss orders to limit potential losses. These orders automatically sell your assets when they reach a certain price, protecting you from significant downturns. Diversify your portfolio, because putting all your eggs in one basket is never a good idea, especially when that basket is made of volatile digital assets. Spread your investments across different cryptocurrencies to reduce risk and increase potential returns. Charts, lines, and crystal balls. Technical analysis, or TA, is like reading tea leaves, but instead of tea leaves, it's charts with lines and squiggles. It's about identifying patterns and trends in past price movements to predict future price action. Don't worry, you don't need to be a math whiz to grasp the basics. Learn about common indicators like moving averages, RSI, and MACD. These tools can give you insights into market sentiment and potential price reversals. Remember, TA is not foolproof. It's more like a weather forecast than a prophecy. It can give you an idea of what to expect, but sometimes the market has a mind of its own. The crypto countdown. Imagine a global event that happens every 4 years, causing a stir in the crypto world. No, it's not the crypto Olympics, although that would be awesome. It's Bitcoin halving. Every 210,000 blocks mined, the reward for Bitcoin miners gets cut in half. This reduces the rate at which new Bitcoins enter circulation. Think of it like a Bitcoin faucet slowly being turned off. Historically, Bitcoin halvings have been followed by significant price rallies. Why? Basic economics, my friend. Scarcity drives up value. But remember, past performance is not indicative of future results. Altcoins versus meme coins, from serious to seriously silly. We've met the mighty Bitcoin, but it has a whole extended family of altcoins. These are alternative cryptocurrencies, each with its own unique features and purpose. Some altcoins like Ethereum, Solana, and Cardano are serious contenders. They offer smart contracts, decentralized finance, and other innovative applications. Think of them as the ambitious siblings trying to outshine their older brother. Then we have meme coins, the class clowns of the crypto world. Dogecoin, Shiba Inu, Pepe. They're here for the laughs and the potential for short-lived gains. They're like that friend who shows up to a party in a banana costume. Entertaining, but not someone you'd trust with your life savings. Your crypto trading platform. Now that you're familiar with the crypto landscape, you need a reliable vessel to navigate it. Enter a cryptocurrency exchange that's like the Starship Enterprise of trading platforms. Choosing the right trading platform is key. Some of the most popular exchanges include Binance, Coinbase, Kraken, Gemini, and KuCoin. First, consider security. Look for platforms with strong security measures like two-factor authentication and cold storage. Kraken, Gemini, and Coinbase are known for prioritizing security, offering cold storage options and insurance on digital assets stored online. Next, review the platform's fees, trading, deposit, and withdrawal fees. Platforms like Binance are popular for low trading fees, while Coinbase may have higher fees but offers ease of use. Make sure the platform has an intuitive user interface. Coinbase and Gemini, for example, are user-friendly, which can be helpful if you're just starting out. Consider the range of cryptocurrencies each platform offers. Binance and KuCoin support an extensive selection of coins, while Kraken and Bitstamp focus on a smaller, carefully selected set. The best platform for you is one that aligns with your trading style and goals, whether you're interested in frequent trading or simply holding long-term. Choose a platform that provides the tools you need to succeed in crypto trading, whether that's advanced trading features or simplicity. Top-down trading. Imagine analyzing the crypto market like a hawk scanning for prey. Just as a hawk soars high above, gaining a broad perspective before diving in, you too can adopt this strategy in trading. That's the essence of top-down trading. It's a method that allows traders to start with a macro view of the market, understanding the overall trend and sentiment. It's about starting with the bigger picture and then zooming in on potential trading opportunities. By doing so, you can filter out the noise and focus on the most promising setups. Begin by analyzing higher timeframes like the weekly or daily charts. These timeframes provide a clearer view of the market's direction and major trends. Identify key support and resistance levels, those price points where the market tends to reverse. These levels are crucial, as they often indicate where significant buying or selling pressure exists. These levels act like floors and ceilings for price action. When the price approaches these levels, it often hesitates, providing potential entry or exit points for trades. Then, use Fibonacci retracement, a tool that helps you identify potential price reversal points based on the golden ratio. This mathematical concept is widely used in trading to predict future price movements. It's like having a secret code to unlock the market's hidden patterns. By understanding these patterns, you can make more informed trading decisions. By combining top-down analysis with Fibonacci retracement, you can increase your chances of finding high-probability trades. This approach not only enhances your market perspective, but also refines your entry and exit strategies, making your trading more precise and effective. Research and backtesting. This is where the rubber meets the road and your journey into the world of crypto trading takes a more serious turn. Congratulations, you've reached the final level of your crypto trading initiation. It's a moment to celebrate, but also a time to buckle down and get serious about your strategies. But before you start throwing your life savings at Bitcoin, remember the golden rule. Do your own research. This means diving deep into the world of cryptocurrencies, understanding the technology behind them, and staying updated with the latest news and trends. The crypto market is constantly evolving. Prices can change in the blink of an eye, and what was true yesterday might not be true today. It's a dynamic environment that requires constant vigilance. New projects emerge, and regulations change. Each of these factors can have a significant impact on the market, so it's crucial to stay informed and be ready to adapt your strategies accordingly. Stay informed about the latest developments and never stop learning. Attend webinars, read articles, and engage with the crypto community. The more you know, the better prepared you'll be to navigate the market's ups and downs. It's like learning a new language. It takes time, effort, and a willingness to make a few grammatical errors along the way. Don't be afraid to make mistakes. They're part of the learning process. Once you've developed a trading strategy, backtest it using historical data. This means running your strategy through past market conditions to see how it would have performed. It's a crucial step in refining your approach. This helps you see how your strategy would have performed in the past, and make adjustments as needed. It's like having a crystal ball that lets you see potential outcomes before you commit real money. It's like practicing your dance moves in private before hitting the dance floor. You want to be confident and prepared before you step into the real world of trading. Remember, crypto trading involves risk. The market can be unpredictable, and even the best strategies can fail. It's important to be mentally prepared for losses and not let them discourage you. Never invest more than you can afford to lose, and always be prepared for the unexpected. This is a fundamental rule that will help you manage your risk and protect your financial well-being. So, what are you waiting for? Start your crypto journey today. Educate yourself, choose a reliable platform, and get started in the fascinating world of digital assets. But remember, take it slow, stay informed, and don't let FOMO make your decisions for you. Let us know in the comments what you'd like to learn next. Happy trading, and we'll see you in the next video.